Good evening, guys, and welcome to this evening's Collab. So as usual, this will be recorded, so you guys can listen to this afterwards, anybody who's not able to make it this evening. So I'll jump right into it so that we don't waste any time. And the recording is not too long. So what I want to do this evening is just give you guys some feedback on your first assignment, which has just been completed marking, which you've handed in and has just been completed in terms of marking, so that you guys can see what the answers should have been, where, especially what's very important is so that you can see where you went wrong, because that's really where you learn. So most of you did really well. There was only one or two oopsies here or there, but in the majority, the students passed and did super well in the assignment. But there are always those areas where everybody seems to make the same mistakes or battle with the same questions. So that's what I want to just go over this evening with you. Just sort all my papers out on the desk here, so I always seem to have way too much on my desk. Okay, so I am going to share my screen so that we can see both the question paper and the memo on the screen at the same time, and then I'll go through that with you guys so that we can see what's happening there. Okay, so just give me a minute while I go find my share screen section. There we go. All right, so any minute now you should be able to see the multiple screens. There we go. Okay, so now I can jump over to the papers. Okay, I'm going to put the question paper and the answers next to each other so you can see the two at the same time. So it might be a little bit small on the screen, but I think this way it's going to actually be easier to see what's potting. Okay, so this one over here, the true or false, there were very few people that got all 5 of these questions correct. So they always appear to be fairly easy, but it can be quite deceptive. So have a look over here, direct deposits. So remember, what happens to the direct deposit is when somebody goes to the bank and they deposit money into your bank account directly into the bank. They either make an EFT from their bank account into your bank account, or they physically go into the bank and make a deposit. That's what's called a direct deposit. So what happens there is that they're bypassing the business. In other words, the money doesn't first go to the business and then the business does the banking. The customer does the direct deposit themselves. So remember, this question here was mostly to do with Learning Unit 1, which is your bank reconciliations. So you had to be familiar with the various types of reconciling items to be able to get these questions correct. So in other words, is it an adjusting difference? Is it a timing difference? Is it an error? That type of thing. So direct deposits is an example of an adjusting difference. And the reason that that is true is because the only reason you wouldn't know about the direct deposit is because it would appear on the bank statement. So when the business receives the bank statement, they would then see that a deposit had been made and they would adjust their cash book. So that is an adjusting difference. Bank charges, again, when you get your bank statement, the business would see on the bank statement that bank charges, that the amount of the bank charges, and then they would also adjust their cash books by entering that bank charges expense in their cash book payment. So that is not a timing difference. So that is false. That would also be an adjusting difference. And then interest on overdraft is exactly the same type of transaction as bank charges. You would pick up on your bank statement that interest had been charged, and you would then adjust your cash book payments. So it is not a timing difference. It is an adjusting difference. And then a debit order. So again, you would see on your bank statement that a debit order had gone through, and you would use your bank statement as the source document for then entering that debit order into your cash book payment. So yes, a debit order is an adjusting difference. And the last one, if the bank understates a deposit on the bank statement, so in other words, the bank has made a mistake, an error, is this an example of a timing difference? And no, that's not correct, because if the bank has made an error, that is an item that is going to be put onto the bank recon document, and you will then advise the bank that they made a mistake so that they can correct it. Okay, so just make sure that you understand the reasoning behind all of these, whether it was true or whether it was false. There were quite a few students that got all 5 of them completely the wrong way round, which was a bit worrying. So please, if that was you, go and have a look and see what happened. Okay, then we had Stella owns a retail shop, sells goods for cash. Also sells goods on credit. She also purchases certain goods for cash and on credit. So here we had to match the term in column A with the correct statement in column B. Guys, when you get an instruction like this in the question paper, then you must do exactly what the question said. So it said, match the term, and in your answer booklet, only write down the number of the question from column A. So you had to just write down this question number, and then next to it, the corresponding letter that you had chosen. There were some students also that did long and complicated things here that were quite difficult to mark because they didn't put the letter next to the question number. So have a look, please pay attention to that as well. That's part of the feedback, is to make sure you are reading your instructions carefully. So on the left-hand side of your screen, this is what they gave you. And if we have a look on the right-hand side of your screen, these were the correct answers. So the first one, creditors control or accounts payable. Correct answer is D, general ledger account that provides us with an exact amount of how much we owe from credit purchases. So creditors is the amount in our books, is the amount of money we owe to our suppliers. And then a creditor, in the scenario, you had to pick who the creditor was. So your creditor is the company to whom you owe money, from whom you have purchased on credit. And in this question, that was Concord Stores. Then what is a debtors list? So that is E, it's the list that is totaled and then compared or reconciled to the balance of the debtors control account at the end of each month. So remember, your debtors list consists of the list of all of the customers who owe you money. And then a debtor, in this case again, is a customer who is purchasing from you on credit, and that in this case was Apollo Stores. And then the last one, your debtors control or accounts receivable control, and the definition for that is C. It's the general ledger account that provides us with the exact amount of how much is owed to us from credit sales that we made. This was a very good question, and if you attempted this on your own, then I'd be very proud of you if you've got all of that correct. So also, if you didn't get this correct, make sure that you understand the difference between a creditor and a debtor, and creditors control and debtors control, and that you understand exactly what we mean when we refer to a debtors list. Then we come to question 2, which was for 50 marks, and this is also from Learning Unit 1, which was about the bank recon process. So let's just go and have a look at the question. So Stella started her own business, and she was told that she needs to perform a bank recon every month, but she does not understand what this entails. So she doesn't know anything about a bank recon or what the bank recon process is. So for 6 marks, and please remember I said to you in the beforehand, always have a look how many marks the question is for, and then make sure you write sufficient information for that. So briefly explain to Stella, and here again they wanted the bank recon process. So they didn't say what is a bank reconciliation, they said describe the bank reconciliation process. So in your textbooks you've got that section with all the steps in the bank recon, so you should have gone through that. If you have, I'm not going to read through this in detail, but you can have a look on the screen here as to what sorts of things you could have written to get those 6 marks. So really remember, with this type of question, we are testing to see that you understand and can explain in your own words what these various terms mean. So the essence of a bank recon is we are comparing the movements of cash in the business's cash books, the cash book receipts and the cash book payments, with the movements of cash in the business's current account as recorded by the bank on our bank statement. So the comparison of those 2 different sets of records is then the bank reconciliation process. So you could explain the process in various different ways. That's why I'm not spending too much time on the exact memo answer. And then 2 types of awareness differences. So that is adjusting or timing differences. And all you had to do was just name them for those 2 marks. And then for 4 marks, explain to Stella why there would be differences between transactions recorded by the business and those recorded by the bank. So remember, they said why. So always go and have a look at what is the question. So this one said, briefly explain to Stella the process. This one just said, provide the 2 classifications. Okay, so always, I can't emphasize how important this is going to be in your assignment 2, and especially when you come to the exams. The students lose marks time and time again because they don't read the question properly and they don't read the instructions and follow the instructions carefully. Super, super important. So again, we want you to explain in your own words so that we can gauge your understanding of what sort of situations would arise that creates the fact that there are differences. So again, you could have put anything in your own words here. So we're saying either the bank or the business is not aware of a particular transaction that was recorded by the other, or the transactions were recorded differently by each party. So one of the parties made a mistake, or an error could have been made by either, so some other type of error. So those are 3 different ways in which differences could arise. And then 2.1.4, provide 1 example of each of the following. So you had to just, again, test understanding, because we wanted to know what type of error could the bank possibly make. So they could either do an understatement or an overstatement of an amount made by the bank, or any other suitable example. So you can see there's no one correct answer. There could be several different correct answers. So as long as your example was appropriate for what they had requested here, then you could get those marks. An error committed by the business, example. An adjusting difference where the business is not aware of a particular transaction. So these last two were mostly where the students made mistakes. So any adjusting difference, so in other words, interest charged by the bank or bank charges or a debit order on the bank statement, those were the types of things we wanted there. And then an adjusting difference where the bank is not aware of a particular transaction, that would then either be an outstanding payment that hadn't cleared through the bank yet or an outstanding deposit that hadn't cleared through the bank yet, is what we wanted in that section. And then difference between a stop order and a debit order. So most of the students got this correct. A few got a little bit muddled up. And the main difference is that a stop order is an agreement between the business directly with the bank itself, and a debit for a particular amount of money to be debited off the business's bank account each month, or whatever the interval it is. And a debit order is an agreement with a third party and the bank that is signed by the business, again, where the bank is then going to make a payment to a third party. But again, take note, 6 marks. You must give sufficient information for 6 marks. And you can have a look over here. Question 1.7 in the textbook gives you explanations of that as well if you were muddled up. Then it comes to the reconciliation section. So in the question, you were provided with the following summary of cash book receipts and cash book payments before any adjustments have been made. So remember, in the recon process, we would have got to the end of the month, and at the end of the month, we then do the reconciliation process. So what we do in our cash books is we draw a line under the last entry that we made at the 31st of December. In your textbooks, you'll see they draw a thick black line, and then any adjustments that we're going to make in the cash books, we then write in underneath that, that line. So what you have to do, if you look on the right-hand side here, the cash book receipts, total cash book receipts before adjustments, so that is these amounts added together just in one total. Some students wrote them all out, that's also fine, but you just needed to do the total, and then underneath that, what were the adjusting entries made in the cash book receipts. And again, what you should have had there is that there was an error made in the cash book payments on the 5th of December. So where we have overstated a payment in the cash book payments, we don't go to the cash book payments and do a minus in the cash book payments. We go to the cash receipts and add the money back in the cash receipts book. Okay, so an error made in the cash book payments, where we have taken off too much money from the bank account, we correct by adding that money back in the cash book receipts. So your cash book receipts will only be positive amounts going into the bank account, and your cash book payments will only be negative amounts coming off the bank account. And then in your cash book payments, again, you would have taken the total of all of these payments up until the 31st, which in this case was 10,750. I think that amount was correct. And then the adjustments that were made in the cash book payments were the adjusting differences for bank charges that we picked up on the bank statement and the debit order that appeared on the bank statement that we hadn't yet recorded. And then we calculate a new total, or what would then be the final total for the total amount of payments and the total amount of receipts for the month. Okay, so these two amounts here and these two amounts here would have been entered in the cash books as a result of doing the bank recon. process itself. So in the information you were given, they gave you the bank statement for the month of December with all of the entries in it and all this extra information as well. So it's this extra information that you would have used to identify those four amounts. This one over here, the cash payment made on the 5th of December was correctly recorded by the bank. So this is where we had to then correct the business's amount, etc. So for 10 marks, you had to do these, provide the corrected or final cash book receipts and cash book payments after taking into account all the adjustments. And this is very important, show all your work-ins. I'm still seeing way too many students not showing their work-ins, and you definitely can lose marks by doing that. And then using the amounts that you got in 2.2.1, post your cash books to the bank account in the general ledger. So remember, as soon as they talk about a general ledger, we are talking about the T account, which looks like this. Okay, remember bank at the top, and here's our T line down the middle with day details amount for any debits on the left-hand side and day details amount for any credits on the right-hand side. This particular one, we didn't have folio. You usually have day details folio amount. So always start with your opening balance. Where did they give us that? Here we go. They said opening favorable balance at the 1st of December was 3,700. They've got the 31st of December there. That should be the 1st of December. Okay, so December the 1st, balance under details, amount 37, opening balance. And then because bank account is an asset, assets increase on the left-hand side. So we are going to add the receipts on the left-hand side of the T. So under details, we just write total receipts because we are just giving them the total of the bank column in the cash book receipts. So whatever amount you had there is what you needed to put here on the left-hand side. And on the right-hand side, credit in the bank account. We credit the bank account when the balance in our bank account decreases. And when we make payments, the bank account decreases. And there you should have given us the total for your adjusted cash book payments. And that is really literally all that we post into the T account for the bank at the end of the month. Opening balance plus total receipts on the left-hand side and minus total payments on the right-hand side. And then you had to balance off the account, which means you had to add up your amounts on the left-hand side. And because the total on the left, 25,050, was greater than the total on the right, 15,250, we write the amount that is greater on both sides. And then on the side where it was less, we calculate the difference. So 25,050 minus 15,250. And you write down the balancing figure 98 there. And we call that December the 31st balance carried down 98. So your right-hand side adds up to 25,050 and your left-hand side adds up to 25,050. But the purpose of doing that is to work out what the balance is. And because the left-hand side was the greater amount, that balance belongs on the left-hand side. So we write it 1st of January, balance brought down 9,800. So we've got, in this case, a positive balance in our bank account of 9,800 that we'll start the beginning of January with. So that account balancing process is always the same for any T account that they ask you guys to do. And it is important, so make sure, practice it over and over again with a couple of accounts until it flows and you understand what you're doing and you can repeat it without looking at any solution. And then lastly, they wanted you to prepare the bank reconciliation statement for the month of December. So the memo has got two different versions, either starting with the bank account, the 9,800, the closing balance of the bank account, and working back to the balance as per the bank statement. And remember, we are always reconciled to the bank's, the bank recon is to the closing balance on the bank statement must be reconciled to the closing balance on your general ledger. So we need to reconcile 9,800 to 6,900, and in between the two, list the adjusting differences. Sorry, these won't be adjusting differences. On the bank recon, you will only have timing differences or bank errors that makes up that difference. Because remember, anything that the business, any error that the business made or any adjusting difference that we found for the business, we've already corrected in our cash books. These were any adjusting differences or errors on the business's part. We've corrected those. So our cash books are correct. When we do the bank recon, we are listing the entries that the bank must still make. So that usually I prefer to do it this way around, starting with the bank statement, so that you are then listing, say, this is what the bank says we've got now, and the bank needs to make these changes so that they then get to the same balance that we've got in our bank account, in our general ledger. So EFTs not reflected, that would be an example of a timing difference. Outstanding deposits, an example of a timing difference. And then the bank made an error that they need to correct. And remember always to get the pluses and minuses the right way around. So it was a positive balance in the bank account. If there's a payment the bank hasn't yet processed, that means we must put that in brackets because the bank must still deduct that amount of money from our bank account. And if it's a deposit that the bank hasn't yet processed, we must plus that because the bank must add that to the balance that they are currently recording. And the error, it would depend on what the error is, whether that is going to be added or subtracted from the balance that the bank currently has. Okay. So hopefully you guys, going through this question again, what I would really suggest that you do when it comes to studying for the exams is to use this assignment to come and revise your bank recons. It's a very nice question to revise bank recons with. And remember, guys, anything that you don't understand, make sure that you let me know. Because if you don't tell me where you battle in, then I don't know what information to give you, what you need from me. I just quickly want to jump back to see if anybody has got any questions. No, nothing, nobody there. Okay. Sorry, I'll just have to tile that again. Okay, so then that leaves us with question 3. To have a look at what we did here. So in this one, this was questions on learning unit 2, which is your debtors and creditors reconciliation. So in this question, we had Stephen owns and runs a store called Zodiac General Dealers. He allows goods to be sold on credit. The year end is the 28th of February. he went over all the information regarding his debtors to find out why his debtors control account did not balance to his debtors list. Okay, so he did the recon process at the end of the month or the end of the year, and the two balances were not the same, and so he had to go and investigate what all the problems were so that he could then make corrections. He discovered the following. So these are all the different things that that he discovered that needed to be adjusted either in the general ledger itself, in other words, the debtors control total, or perhaps it was something that was an error that was made in the debtors ledger itself. So remember, your debtors list, also referred to as the debtors ledger, is the collection of records of each individual customer that owes you money. So you think of it as a page per customer, showing all of the transactions for that particular customer and how much money they owe you. That is the debtors ledger, the total of which makes up the debtors list. The debtors control is the T account that appears in your general ledger, which is the account that you post the debtors journal and debtors allowance journal and general journal to at the end of every month. Okay, please make sure you understand the difference between the general ledger, in which the debtors control account appears, and the debtors ledger, which makes up our debtors list, makes up the total. So let's just go and have a look at what they asked us. Debtors control balance. They gave us the debtors control balance and the debtors list balance over there. And then we had one particular customer, Ontari Stores, and this was their statement of account that was sent. So I reminded you guys just to check to see it started on the 1st of November, and we had November, December, January, and February transactions all on the statement. This is what we call an open item statement, which means any amounts that are outstanding are all printed on the statement so you can see everything in front of you that makes up the total amount outstanding at the end of the year. Then there were the terms. 5% discount is granted if they pay within 30 days of statement date. So only if the entire account of the customer is up to date with no invoices older than 30 days can you then give them that 5% discount when they pay you. So in order to get discount, they must pay within 30 days, but the normal terms of payment are 60 days. And if they don't pay within 60 days, then they will start charging them interest. So this business, as soon as amounts are 90 days overdue, then they charge them interest at 2% per month. Okay, so again, you needed to understand the implications of each of these three different statements at the end. And then they gave us a little age analysis of the customer at the end, showing us that there's this 32,380, the opening balance, plus that invoice 16 is 90 days. And then there is 11,330 in 60 days, which is the 2 December amounts, the invoice minus the credit note. That makes up the 11,330. And then in 30 days, that's the January invoices, 118, which again is an invoice minus an EFT and minus the discount. That left 118, and then current will be the February invoices, which is the invoice 65 plus the interest. Those two amounts make up what is in current. So because the date of the statement is February, the February transactions will be reflected in the current column. And then January will be 30 days, December will be 60 days, and November and older will be 90 days. So Explain why the balance of the debtors control account and the total of the debtors list should balance. So again, have a look carefully at how the question was asked. Why should it balance? So again, most of you had good answers there. They need to balance so that we know we haven't made a mistake in either the debtors control. If they don't balance, then we know there's something wrong, that we've made a mistake or an error somewhere in either the debtors ledger or the general ledger. So something along those lines. Then you had to prepare the general journal entry required to correct the mistake noted in 1 above. So the mistake in 1 is this one over here. An invoice for 4270, we invoiced B Baker, but it was entered into the account of C Baker in error. So that would have taken place in the debtors ledger. So we need to go and correct it. So we need to debit B Baker and credit C Baker. Okay, so have a look on the right-hand side. And remember the general journal, which is what they asked us for. Just 1 second. Is where we've got document day details and then a debit column and a credit column. And for each journal entry, we need to have equal amount in the debit column and an equal amount in the credit column. And then underneath that, we put the narration, which is just a short description of why did we do that journal entry. So you could have put there debtors control and then in brackets B Baker debit, and debtors control and in brackets C Baker and credit. So what that would mean is that the debtors control general ledger account is getting a debit and a credit, which means the total in that control account is not going to change. But in the debtors ledger, we would be debiting B Baker's account and crediting C Baker's account. And then for 3.3, we had to reconcile the debtors control account to the debtors list. So what you had to do here, the best way to have laid this out was to have a column for the debtors control and next to that a column for the debtors list. I think they had that laid out like that in your question paper. Yep, they had it laid out like that in your question paper. And you had to start at the top with what are the balances now. So remember, they gave us these 2 balances here. They said the debtors control balance was 42,640 and the debtors list balance was 48,490. So that was where you got the information to start those 2 amounts. Unfortunately, in this memo, they haven't given us the details of exactly what they've done here. And I'm just trying to remember this one over here for 3,000. They were sorry, we were supposed to credit the debtors control, and we credited it with 21,790 instead of 24,790. So debtors control had to get an extra 3,000 Rand credit. And then with this 360, there was an invoice that was had been entered incorrectly for too much. We had entered the invoice as 16,840 instead of 16,480. So we were overstating the debtors control. So debtors control had to decrease by 360, and also the individual debtors account in the debtors list also had to decrease by 360 because the error was on the invoice itself. And the invoice had been posted to the debtors control as well as posted to the individual debtors account. So both of those had to reduce by 360. Then 270 Rand, we had to record interest we had charged that hadn't been recorded. So it hadn't been recorded at all. So we had to debit debtors control and debit the debtor itself in the debtors list, debtors ledger, both by that 270 Rands worth of interest. And the 550 was where we had to record the discount in the debtors ledger. So it was only the debtors ledger where the discount had not yet been recorded. So only on that side. And then the 8,300 was we had to add back to debtors control the amount because it was no longer recorded as it had been previously written off. So yeah, what was that? Let me just quickly go and find that transaction. 8,300 here. On the 25th of February, they received an amount of 8,300 from a customer. The account had already been written off as a bad debt, which means we had credited debtors control. So the receipt had now been entered into the debtors control column in the cash book. So in other words, in the cash book receipts, we had debited bank and credited debtors control. So we can't credit debtors control in the cash book because debtors control had already been credited in December when we wrote that amount off as a bad debt. When it was written off as a bad debt, we would have debited the expense account bad debts and credited debtors control. So what we had done here in the cash book was credited debtors control for a second time. So the correction was to debit debtors control, which is then a reversal of this credit. That credit should have gone to an account called bad debts recovered, which is an income account. And then after making those adjustments, our two columns equal, and we have then done the job of reconciling the debtors control general ledger account with the debtors ledger debtors list. This one, hopefully you guys have understood what we've done there, because there weren't many students that got that question correct. I just want to see what else there is here. I don't want to spend too much time. In your own words, explain a debtor's age analysis. So that was fine. Most of you guys got that. And then prepare the journal entry to record the settlement discount granted. So when we record settlement discount, and I did give you in your lesson plan, go back and have a look there in your textbooks. They tell you what accounts you need to debit and credit when we record discount. We debit the sales account and debit the input VAT account. So in other words, we're doing a sales reversal. Because remember, when we make a sale, sales account gets credited. Now we are recording discount, which means the Rand value of that sale is less than we originally recorded. So we credit the sales account, and we have to credit the input VAT account, because the debtors control account gets credited with the full including VAT amount. Because remember, the including VAT amount is what is sitting on the debtors account as being the outstanding amount that they owe us. But in our books, we have to separate that amount between the sales value and the input VAT. So when we recorded the sale originally, we would have credited sales and credited output VAT. So now we are reversing that. So we are debiting sales and debiting input VAT. Here's the calculation for the amount. It is 5% of the amount that they are paying us, because the discount is 5%. And then to record the interest received is the paying the outstanding debt of 32,380, so 2% of that amount. There's your calculation. And remember, interest, there is no VAT on interest. It is a VAT exempt amount. So the full amount of that calculation gets debited to debtors control because interest increases the amount that the customer owes us, and we credit the income account called interest received. So you could have called it interest received or interest income, either one, but you did need to indicate that you knew that that was an income type of account. Identify the error. That was just the fact that we've done that. The error was that we shouldn't have granted them discount because there was still an amount outstanding. So that was a bit of a tricky one, I will admit. And then the cash deposit that hadn't appeared yet, because the business deposited it on the 15th of March, the amount will appear on the customer's statement the next month on the 15th of March. In which column on the bank statement the 10,000 Rand will appear once it's been deposited. So they said in which column on the bank statement. So on the bank statement, when we receive money, it goes into the credit column. And in which journal, so that's in our books, will the 10,000 Rand be recorded? And because we are receiving the 10,000 Rand, that will go into the cash book receipts. So most students did get that correct. And then this last one, whether you agree or you disagree, this was really up to you, how you went about deciding what to write there. They said that they come to the realization that interest is not an effective way of getting their debtors to pay. Do you agree or disagree? So most of you said you agree it's not effective, and then provide 2 reasons why, and that was entirely up to you, and then come up with an alternative method that they could use to make sure that their debtors pay on time. So they could be, the customers could be provided with incentives like a larger settlement discount, for instance, to encourage them to pay. I think most of the students suggested a discount. So that was what was said by most students. Okay, guys, I hope that this run through has helped you wherever you were stuck. Please go through it with your marked papers, so that you can see exactly where you made a mistake and what it should have looked like, because that is really the way to learn. The only remark that I want to make is that I noticed there were several students that are using ChatGPT or some other bot to generate answers for them. It's easily detectable, and guys, please be very careful of doing that. You have to reference, and ChatGPT does not give you references unless you know how to use it properly. And you cannot use the textbook as a reference when you have got the information from somewhere else, because we know what's in the textbook. So when you write something weird and wonderful that's come off the internet and you give the textbook as a reference, we know that that reference is incorrect. Please be mindful of that, and be very careful in future that you do not wait until the last minute so that you are forced to try and generate answers on the internet. Okay, so I'm going to end the recording here so that it doesn't go on for too long. And just a reminder, your NSS will be on the 12th of October for your second assignment, which is due on the 17th of October. So you've got 3 weekends left from today's date to complete assignment 2. And also the other reminder I wanted to give you is that your ICE final due date is the 13th of October. So please keep that in mind as well. Okay.